Okay, realistically and without clickbait, I can say that this week we're waiting for a major turning point to the price of Bitcoin, after which we will either go to 100,000 or we'll back to 70. I'm pretty sure that Bitcoin will update its all-time high and in the perspective of a year and a half, something like that. But now we're talking about short and medium term movement, and here it can get on our nerves. Since the topic is extremely serious and according to my YouTube studio, my channel is watched mostly by adult men from 35 to 55 years old, I think the best way to understand this situation is to use memes with cats. So let's get started. Bitcoin grew by 16% in April, and this is the best month since May 2025. But it has approached 80,000 3 times in the last 8 trading sessions, and every single time it went down. The last attempt was actually today. Bitcoin jumped to $79,400, updated its 12-week high, and then sharply went down to $77,600. So why 80 is a key figure here, and what happens if we finally break through it? First of all, 80,000 is a break-even level of medium-term holders, those who bought in January and February at the bottom of the market. And they were not even suspecting that Trump was just getting a taste of it. And they were in the red for months, and now with the faces of soldiers who returned from the war, they are battered and gray-haired, and they go to zero at the first opportunity, and this creates a powerful wall of sellers. But the irony is that if, or rather when, we break through the level of 80K, these same people will start believing in the continuation and will buy even more, which will push the price up. But if it's not a sharp breakout with the same sour-eyed level-leaking normalization, they will continue to be fixed with zeros and the price will continue to bounce. Okay, so that means that we need an impulse surge, and what can provide it? It is important to understand that all these April growth is 90% by and large geopolitical, actually just like falling before that. Axios, citing an unnamed American official and 2 sources familiar with the situation, published the news that Iran has made a new proposal to the United States to open the Strait of Hormuz, and the nuclear talks were postponed until the lifting of the blockade. What is noteworthy is that the United States has not yet officially responded to this proposal, but the markets have already read it as a de-escalation. And oil-adjusted Asian indices rose by 1.7%, and Bitcoin just whapao, shut up. But the rally was short-lived. As soon as the price touched $79,400 zone, those mid-term sellers turned on. Bitcoin markets analyst Rachel Lucas says bluntly that 80,000 is a break-even point for recent buyers, and historically there has always been selling pressure at such levels, and people who have been underwater for weeks come out as soon as possible. In addition, Sentiment has recorded that over the past 2 weeks, large wallets have accumulated another 40,967 bitcoins, and that is, the institutions continue to buy, but volumes are falling at the same time. From March 4th to April 22nd, Bitcoin made higher highs, and the peaks in the volume of purchases became lower and lower. The divergence is essentially a bearish signal. Purchasing power is weakening despite rising prices. In fact, this reinforces the conclusion that if we want to see 100K Bitcoin, then we need a surge in the activity of whales and institutions. At the same time, the futures market is also in an unpleasant situation right now. The 7-day funding remains negative at minus 0.13%, while the 30-day cumulative funding has reached minus 7%, and this is one of the lowest numbers ever recorded. In short, for those who are not in the subject, negative funding is when shortists pay longings for the right to hold positions. And there are so many shorts right now that if the price goes up sharply, a short squeeze will begin, and then we can get a 5 to 10% rocket in just one day. But there is a downside. Until the price breaks through the 80K level, the bears feel confident. And any downward movement will be intensified by their activity. In general, summing up all of the above, we get a situation where an impulsive overcoming of 80,000 is likely to lead to a rapid increase to $90,000 or even $100,000, and an impulsive fall to a further decline to 70,000. In fact, everything now depends on the US reaction to Iran's proposal, of course. If the de-escalation is confirmed, then oil will fall, rates will stop rising, and Bitcoin will receive the same impulse surge. But if the situation escalates, $74,500 will become the nearest level, and then 72,000 and 69,700 under pressure from the shortists. Alright, I'm not giving a financial advice right now, I'm just sharing what I'm doing, and I am not touching my spot portfolio for now. If we drop, then I will buy even more in the range of 75 to 70k. And I'm also keeping my 3x leveraged long open since I don't think the price is going below 60k, that's my opinion. But I don't see a reason to open a new high leverage longs until we break above $80,000. But after the breakout, I might go for like 5 to 7x long. And by the way, I trade on OKX, which is probably the best platform for buying and trading cryptocurrencies today. If you want to try OKX yourself and get welcome bonuses as well as support my channel, my referral link is in the description box down below. And that's it for today. Let me know in the comment section how you like this format of analysis and news. And don't forget to like up this video, subscribe to the channel, and I will see you tomorrow. Bye.